Welcome to today's webinar, Size Isn't Destiny. I'm Thomas Duffner, founder and CEO of TFD Consulting, the sponsor of what we all expect to be a very engaging and insightful discussion. Permit me to be among the first to say, I believe all credit unions, no matter what their asset size might be, form the bedrock on which today's financial services exist for all consumers throughout America. Think of it. Credit unions were founded as the solution for those not able to access and receive affordable credit and other kinds of financial support offered by the banking industry back in the early 1900s. And today, they remain committed to that very same purpose, that same mission of great importance. By maintaining an array of offerings from competitive rates and educational programs on finances and money management to delivering that personal touch and giving back to their communities, credit unions continue to help members achieve their dreams. That's because every credit union is owned by its members and embraces a business model defined by the 7 cooperative principles, as well as adherence to a set of ethical values: honesty, openness, social responsibility, and caring for others. There's no doubt in my mind, credit unions are truly people helping people. And this explains why I'm so proud to sponsor today's discussion. TFD Consulting, which I founded, is a small, family-owned business, and just like credit unions, we too also adhere to that same ethical values and business principles that distinguish credit unions in the marketplace. In loyalty to our clients, we commit to a lasting partnership throughout which we apply our knowledge and our expertise at finding ways to maximize non-interest income and reduce expenses. Contract negotiations are our specialty. In fact, last year alone, we generated more than $10 million in savings for our clients. While TFD Consulting is one of several providers in today's marketplace skilled in contract negotiations, I'd say our expertise, size, and family values gives us an incredible advantage and ability to deliver not only exceptional recommendations customized to the unique needs of our client, but also firm and lasting relationships built on the same values and principles that have governed credit unions since their founding. Thank you for joining us in today's webinar, and please send me an email if you'd like to learn more about our services and how they could benefit you and your credit union. Now, here's today's host and moderator, Frank Diekman.
Well, thank you very much, Tom, and thank you so much for making this webinar possible with your sponsorship. It's my pleasure, everyone, to welcome you to today's webinar. I'm Frank Diekman with the CU Daily, where I'm the cooperator in chief, and are so excited to have all of you with us as well as our panelists. This is part of the CU Daily's Profitability Imperative series that we're running throughout 2026, and that came from feedback from all of our readers who felt the tagline is, mission equals margin and margin equals mission. And we've really worked to fulfill that. And we believe at CU Daily, we're part of the community and are trying to provide support and doing all that we can there, and welcome your feedback. So today's speakers, I'm so thrilled we have 4 terrific CEOs and a former CEO with us. Allow me to introduce today's presenters in no particular order. Scott Pryor, who's the president and CEO of Connection Credit Union in Washington State, which has about $40 million in assets. Joshua Urbick, who's the CEO of IBEW 26 Federal Credit Union in Maryland, which has about $30 million in assets. Doug Wadsworth, who is the president and CEO of Tri-Cities Community Credit Union, also in Washington State, which has about $76 million in assets. And our final panelist is Ed Speed, a retired CEO who is also one of the most popular columnists with the CU Daily. He's the former CEO at Texas Dow Employees Credit Union, which today has about just over $5 billion in assets in Houston. So thank you. I welcome all of you gentlemen for being with us today. One more thing before I begin to everyone watching. If you have a question and you put it in the comment box, we will get to that question. We'll do our best to get to it in real time rather than waiting until the end, so that, we've all seen the webinars where you never get to the questions. Our objective is to answer those if you have one. So if you want to tap the expertise of our panel today, please do so. So let me begin by throwing this out to everyone, at least well, to everyone. Why is it that you're confident that you are competitive and viable in your asset size when within credit unions, it's sort of this behind this underground message that maybe smaller credit unions can't be competitive? Why are you confident in your viability and in the viability of smaller credit unions? Doug, you want to take a stab at that? Yep, you're muted.
There we are. Okay, I got somebody unmuted me. Yeah, happy to comment on this. First of all, there was an article, Frank, in your own CU Daily a few months ago about profitable credit unions. And apparently somebody did a study and they looked at all the credit unions, the most profitable credit unions in the nation. The ones who were the most profitable were among them were the smallest credit unions as well. I think the most was 150 million or something, Workman's Circle. So I think there's this narrative, and I don't know where it's coming from recently, saying that if you're small, you can't be profitable and you can't be successful in giving back to your members. But the opposite appears to be true. And you asked, how do I know? Well, we can look at our own numbers, and I did a bunch of surveys. And in my community, I'm the only small credit union. There's five other big ones, and across the board, we're extremely competitive. In many ways, we have even better. I'm usually higher on ROA. My net worth ratio is usually higher, and we're able to give back in meaningful ways as well. So I'd like to counter this narrative that being small has nothing to do with your profitability. So there's my 2 cents, and how you can give back. Really.
And Scott or Joshua, you want to weigh in on that as well?
Yeah, I'll weigh in on that. I think for me, it's the understanding that as small credit unions, we have the ability to collaborate and cooperate unlike anyone else. And I've noticed working with, I've been CEO here 16 years. And the more I lean into the collaboration with other credit unions and helping each other, and I provide help and they provide help for me, gives us a competitive advantage. As an industry, I don't think we are tapping into nearly enough, which is why I started QSO to really kind of focus on that credit union collaboration and how we can do more things together. Because to me, that's how we win, is we do it together, kind of like how credit unions used to do it back in the day. So that's my 2 cents.
Joshua, you formed the, I didn't say it in your introduction, so everyone knows. Some of you may have read, Josh formed the National Association of Small Credit Unions. You obviously saw a need for that. What is it that you're hearing from credit unions that have joined, and why form the group? And what can you bring that perhaps other organizations don't?
Well, thank you, Frank. Yeah, so I mean, as you mentioned, we definitely saw a need in the country and in the industry for what NSCUA is designed to do, and that is help small credit unions, the ones that are struggling, to get back on the right track, to become profitable again, and the ones that are doing great to survive, thrive, and have access to the modern tools that they need to continue being relevant and viable in the future. So some of the common trends and concerns that we see from our member credit unions, which at this point is, I believe, 22 states in the country, and over 40, close to 50 members scattered across the country. We see some common trends amongst them, which is succession planning. Their CEOs are about ready to retire, or there's no identified leader in place, and then they want access to modern tools. They're interested in AI. They're interested in growing their loan portfolios, and they want to make sure that they do have the tools necessary to remain viable and grow in the future. So those are the needs that NSCUA is aiming to fill, and we're excited to be here for that.
Okay.
Can I follow up on what Joshua said too? Just the introduction to this presentation talked about how all credit unions are vital, and I wanted to make sure and point out that the whole purpose of this webinar is not to say anything bad about any certain credit unions, large or small, because we're all vital to the movement. And part of our message is we need big ones, we need small ones. Big ones make an impact in ways we never could because we're little, but our small ones have a significant impact at the local level that we think is irreplaceable. So we're all vital for a healthy cooperative movement. I just wanted to point that out.
Oh, thank you. Ed, I'd like to ask you, in the conversations that we had prior to this webinar happening or taking place today, you had made a note or an observation that you believe that when it comes to small credit unions, often we're asking the wrong question. And what do you think the question should be? And what's the answer?
Well, thank you, Frank. Yeah, I think that we may be focusing on the wrong question of can small credit unions survive. I think that the question we should be asking is what if today's credit union movement's environment, the world of credit unions, the entire environment, once again has come full circle and it now favors the strengths of small credit unions. Let's think back to Edward Filene and our courageous founding stories. We all have our origin stories, and Filene always comes up writ large. But Filene wasn't trying to create smaller, more friendly banks. He wanted to create a different kind of financial institution. And in the world of Filene, the large banks found ordinary working people too small, too risky, too expensive, and too impersonal to serve well. Well, the credit unions won, and from that came the credit union movement that I experienced in the 1985 when it was at its peak. And what was happening today with the larger credit unions, and I think most of the credit union movement is scale, has changed behavior. Bureaucracy, standardization, distance from members are all outgrowths of size and scale and are not moral failures. They just can't do it. I think the marketplace is again going to reward trusted relationships, local knowledge, and speed, human judgment. And I think that all of those consumer adverse retail conditions that gave rise to the great credit unions are back and thriving in credit union land and the smaller credit unions. Also, our larger credit unions have become larger, more centralized, more automated, more sterile, and a lot of CEO ego-driven factors. And they live in the world of algorithms and processes. I just think the world has come back to where small credit unions have their most fertile field, just like our origin stories. And one thing I'd like to add is that a friend of mine who is in the community banking space in their associations told me that there are 475 banks under $100 million that continue to function successfully, all while facing the same regulatory, technology, cybersecurity, and competitive issues. I think it's been proven small credit unions are viable because there's 1,400 of them still working. And if 475 banks can do that and make a profit and turn a return on investment, there's no reason why a credit union under 100 million can't do it either.
It's an interesting observation. Doug or Scott, how do you look at that? Do you think a lot about growth? Do you set a growth target? I've heard this debate where if you don't set a growth target and just focus on the members, the growth will come. Others set a growth target and try to meet that. How do you view growth? Is it a priority for you?
I'll comment on this, Scott, and then you can go next. For our credit union, we don't really care about growth as long as we're not shrinking. Shrinking is not sustainable. But as long as we're stable with our membership and loans, that's an opportunity to give all of our profits, more and more of our profits, back to the members. So I really don't care about growth as long as we're not shrinking, as long as we're healthy and we can get back to our members. That's why we exist, our credit union. So I don't know, Scott, if you want to tack onto that.
Yeah, I'll add, I focus on membership growth and loan growth. And if I'm growing those two things, at least on a consistent basis, then I still deserve to be here and I shouldn't merge. But I said that in my interview and I say it every year at our planning session. I don't care about assets. The asset growth will come, but I want to grow loans and I want to grow my least on some level consistently. And if I'm not doing that, I got to figure out how to do that, because otherwise, what's the point? Might as well just merge out. So.
I will tell our audience, Doug didn't mention it, but his credit union just paid a bonus dividend for the third quarter in a row. Something used to be quite regular at credit unions. You don't really see as much at all anymore, perhaps some at the year end. The name of this, I'm going to touch on something that Ed just said, and that is the name of this webinar, Size Isn't Destiny. Where do you consider, either Josh or Doug or Scott, where do you consider your size to be an advantage if you see one? And where do you find the greatest limitation? Take it in any order you'd like.
Well, I don't view it as a limitation because I can move quickly and I can be more responsive and I can do things that I know others aren't interested in doing, especially some of the underserved populations that we serve. No one wants to tackle that. But, to me, that's where the opportunities are, is all the easy stuff is taken. The limitation comes in with the vendors and negotiating with vendors and getting treated like crap from the big vendors. And we're trying to figure out how to fight back and find better vendor partners for smaller credit unions, because some of the legacy vendors that we relied on for years, ever since COVID, the prices has gone up and the service levels have gone down, and we need to find better options. So that's where it really is at needed is with vendors.
And I'll tie into that as well. I was at GAC several months ago, and Chairman Halpner got up and he talked about small credit unions and the special sauce that we offer. Specifically, he shared an example of a Broadway credit union, which makes loans to people that work on Broadway because they understand the unique situations they're in with their employment, which goes up and down and it changes based on the performances they're in. And so I think small size can be a real advantage, because generally speaking, the larger you get, the more generic you get, and the more difficult it is to be flexible at the local level with small communities or small memberships. The other half of that of how being small can be an advantage is speed. I can launch my little credit union. We can launch a new loan product in a few weeks, from concept to actually launching it to our members, because it can be small. There's only a few people I have to talk to. I can set it up myself. There's not a huge investment of time or money to do so, because I just have one office. And there's only like a dozen employees here. So that's huge. And so we try new things all the time until something sticks, trying to fill niche needs within our membership and within our community. So that's a huge advantage, I think. And it allows us to be more unique and special to the unique needs of our own members.
Scott, before we move on, the QSO you formed, it also does work with vendors. Is that correct? And can you share with what you tried to do there or trying to do there?
Absolutely. And we're trying to really focus on the group negotiation. Group buying is something that is prevalent in other industries, where you get more and you get volume and you get better pricing. And we're just trying to do that with vendors. Obviously, finding the smaller vendors that are interested in that business model, and reaching a larger swath of credit unions. We're just trying to, kind of aggregate as many credit unions that might be interested in something, putting that out to the vendors and say, hey, are you interested in presenting to 5 CEOs that are interested in your solution as compared to 5 individual meetings? There's value for the vendors there, and there's value for us in finding those vendor partners that are really interested in our business rather than being an annoyance to them. And so that's what we're trying to find our true partners, and move away from the vendors, because that's what we need. We need really true vendor partners, not just vendors. And so that's really kind of our focus, trying to find that.
On this subject, Ed, I wanted to ask you, Ed, so everyone's aware, wrote a really well-read piece on his experience while he was at TDECU and dealing with vendors and what his approach to vendors was. Ed, could you share a little bit of that with us?
Thank you. For me, I've got my 1st Cavalry shirt here on. I'm an old broke down 1st Cavalry officer. I'm going to use the term that vendors were my force multipliers. But as I hear this discussion of those of you who are getting these buying groups, I have some concerns, because I think it's very important to differentiate between transactional vendors and relational vendors. Transactional vendors, fine. You get together, you beat them up on their price. You do the best buying job you can do. But I would never let transactional vendors touch my members. They had to be relational. That means they had to have a relationship with me. They had to have a relationship with my team. I gave those vendors a seat at the table when we were going to be involved in a new product or strategy. I remember one specific one we were going to do a huge mortgage refi play. And we brought the conference room, we brought in my team, the mortgage processing and mortgage servicing vendors, a outside marketing agency, ALM First for ALM, and a vendor related to insurance products. And we all sat down and we had them help us build the products. But most importantly, I would tell the vendors in front of my management team, you cannot be a great vendor if we're not a great client for you. And I would say that in front of my team to the vendor's most senior person. And I said, you have an obligation to tell me where you think we can be a better client. Where are we causing friction? And you must also inform me if you're running into silos or staff protecting territory. My team and I will leave our egos at the door, but we have got to become a great client, and then you can be a great vendor. The definitive text on this is a book called Trusted Partners. by Dr. Jordan Lewis, who put together some of the best partnerships that you can imagine, and it's called Trusted Partners by Jordan Lewis. I brought him in as a consultant, and I love vendors. I mean, I think that can be really healthy, highly productive relationships. But I worry about when I hear reducing it to transactions, lowest price to bid.
Doug or Josh or Scott, what has your experience been with the vendors? Have they been decent partners, or where would you like to see improvement, or where have you seen some benefit?
I'll let Scott talk about this one, or unless Joshua wants to.
Well, I'll just say I've dumped all the bad ones years ago, and the ones I have now are really true partners, long-term relationships with all of them. But first 5 years of my tenure was getting the crap out and getting those that, to Ed's point, that were like that. They were relationship vendors, and the ones that I work with now are really relationship vendors. It's not all about price. And to your point, Ed, yeah, we want to be a great client too. And so we're providing feedback, and we're helping, and we're referring people for them. And that's one of the values of the group buying, is if you do a good job with us as a small credit union, we're going to share our experiences with others. And we're very open about that. And we will help you sell your product to others if you take good care of us. We'll make sure and spread the word that you're a good vendor partner.
Any experience you've had in this area, or that perhaps the association you formed is hoping to do with vendors?
Can I chime in on that? Scott does a great deal with his Q. So I don't know if you've heard about he does like a weekly phone call with a bunch of CEOs in our area and some across the nation. And we get to compare notes on vendors. So yeah, credit CEOs get together and talk, which is really helpful, and hopefully will move the needle a little bit with vendors.
Josh, what's your experience been, or what do you hope to do?
Yeah, so vendors plays a huge role of what Nisqua is all about. I've experienced it firsthand here in my own credit union, where you get the wrong vendor, it can break your credit union. You can be hemorrhaging money, and next thing you know, I mean, you're operating in the red for years. And so one of the primary objectives when I came to this credit union, it was struggling just a little bit, is review all the vendors, review all the relationships. And I can tell you, I've met some incredible ones that have really helped us succeed. And in turn, I've also met some horrible ones that we're going to be getting rid of. So it is important. That is a huge part of a credit union, especially a small credit union. But the right vendor in the right place can help you as a small credit union to make sure that you are viable and you have access to the tools that you need to be successful. And one of the things with Nisqua is we're vetting these vendors. We're making sure that they're not predatory. We make them fill out a form, and then we meet with them. And there's been some, I can tell you, that are huge, and they just want access to small credit unions. And in turn, they've offered a ton of money. And I've told them right to their face, no, we're not going to do that, because this is not about that. And you don't genuinely have the best interests of these small credit unions in your site. And so we're making sure that we do have the right people. And I can tell you, I'm very optimistic about the future of these small credit unions, because I have met with so many incredible vendor partners out there that do genuinely care. Great QSOs, people that want to see small credit unions succeed, phenomenal pricing, and gives you access to the tools that a lot of these larger ones are operating with, but at a fraction of the cost. So that is.
And I want to tag off your comments, Joshua. This is something you don't hear at typical conferences or from associations, but one of the key aspects to the success that our small credit union has had, and my philosophy is, whenever possible, to DIY. A lot of these vendors, you pay a whole bunch of money, but for a small credit union, the numbers just don't crunch out. And sometimes people don't tell you that until you go out of business. So for so many of them, boy, figure out if you can do it yourself. You can save a lot of money. And not always, there's some you got to have, but I'm a big DIY proponent if you're going to keep your expenses controlled and keep your efficiency ratios up.
I have a DIY question I'm going to ask you in a moment. But before I do that, so everyone knows, 3 of the 4 of the CEOs on the current CEOs who are panelists today, you have other organizations you formed. Doug has the Endangered Small Credit Union Defense. Scott has formed the CUs Unite, and of course, as Josh has the National Small Credit Union Group. why, before we move on to something else, why do these groups formed? Is the trade, are the trade associations not providing something that other credit unions are seeking? And when these small or other credit unions, they don't have to be small, reach out to you, what is it that they want? What is it they say, you know, this appeals to me? Can any of the three of you reply to that?
Yeah, I'll reply to that. So when it comes to Seize Unite, one of the things we really thought when we started was going to be the vendor piece, but one of the pieces that's really taken off has been our conferences. I started putting on small regional conferences, no vendor sponsors, just to have an opportunity for, as Doug mentioned, we connect weekly. We've been doing that for 3 years, getting anywhere from 15 to 20 CEOs every week. And we just wanted to get together in person and talk about the stuff that we want to talk about. And so that has really taken off. And so it's really, you know, I get why maybe the leagues and trades don't do some of those smaller regional things like we used to, like the chapter meetings used to be a big thing. Now, Lord knows there's some areas that don't even know what the chapter is. But that used to be how we connected and we shared information, was just getting together in person and sharing. And that spirit of collaboration and that trust of small credit unions is still there, and we're just trying to tap into that.
And I don't know if we want to go down this rabbit hole, maybe just for a moment. So we're all kind of being disruptors, and nobody likes a disruptor. There's financial incentives, there's structures in place, and those things are all changing. But I think what happened is for 20 years, our small credit unions have not really been at the table, and we haven't really spoken up. And just because we're so busy in our small shop. So over that course of time, everything has changed until now. We find ourselves in a situation where in most cases, if you look at many associations or leagues, you look at their board of directors, their leadership boards, and small credit unions are significantly underrepresented. And that's who makes the choices. That's who decides where the advocacy goes and how much money and time they spend on small credit unions. So I think our little piece of pie of that has shrunk over the years just because we haven't been there. So we're kind of mixing things up and trying to get involved and speak up to make sure that where we pay our dues is actually going to help our small credit unions as well, instead of just looking the other direction, as it feels like we're going extinct. And of course, myopic, that's what I bring up once in a while. I'm concerned if small credit unions are allowed to go extinct, then I don't think our movement is going to survive, or the tax exemption. It's just a fact that most people, the general public, considers big credit unions as indistinguishable from banks. So I think both large and small are vital if we're going to keep this movement going. So hence, and I want to point out, there's a lot of associations that are doing a good job, but they've been listening and partnering in some leagues, you know, so that's exciting. We're still trying in a lot of ways, at least my efforts, my little endangered small credit defense is being ignored still, but we're still working, and slowly we're getting more attention for what small credit unions need. So there's my 2 bits.
Hey, have any of you,
I would add very briefly, Frank, that when vendors would talk to me kind of off the record or over drinks, it's pretty well known out there in the world that the credit union movement abuses vendors. They especially the associations. It's pay to play. If you're not going to have a major booth or make major contributions, you're not going to get access. We're not going to help you. And I think they like smaller credit unions because you're not there at the trough trying to get something from them or sponsor your next association meeting or next member meeting. So I think that one of the attractiveness of small credit unions is you may be a bit more pure, and I think you're more respected because of that.
Well, and if I may, to your point, Ed, we've seen that firsthand. That
had any experience with any guidance or assistance? Do you reach out, or that's not worth it?
What's that?
Repeat that one time for us.
Oh, that's okay. I was just asking, what's been your experience with larger credit unions? Have you had good success when you reach out and ask for guidance or assistance, or you don't ask? What's been your experience?
I've had great success, and in this state, there are some fantastic most of the larger credit unions in this state have been absolutely fantastic to work with. And that's one of the things we're trying to do, is break down the walls that have come up between the large and the small credit unions, because there's a lot of, you know, this idea of small credit union CEO, like, I'm not going to talk to them, they just want to merge me out. That is such old thinking, and I'm trying to overcome that, because there are a lot of larger credit unions that are very generous, very willing to help, very willing to come to the table. So in this state, in Washington, I think we've got a pretty good relationship with most of the larger credit unions. They are willing. They come to my conferences. I have them as speakers, as CEOs as speakers. And the smaller credit union CEOs love the larger credit union CEOs as speakers. They do a fantastic job. And to me, that just kind of helps break down these walls that have come up, because all those walls do is hurt our industry, and we're trying to break them down. So I've had great success with that.
I would mention this earlier when Doug mentioned DIY. I am almost required by law to ask a question that's AI related, and that is, are you using AI? I've heard it described by some. They see it as this great opportunity for smaller credit unions to leap forward, to really cover ground that might have taken a decade or more. How are you? Is anyone using it? Experimenting it? Had any results? Any thoughts there?
I can comment on that one. AI, it can give a normal employee superpowers, and so we've been able to utilize it. I use it in my endangered small credit union defense, SQ'd quite a bit, but also we used it the other day to do a new timesheet for our employees. It's totally automated. We used AI to develop we gamified our cross-selling for all employees with a live updated website that would have cost us $10,000, and we built it for free in like a half an hour. So there are some amazing superpowers available to help small credit unions really achieve what we couldn't afford in the past. That's been my experience so far.
Scott and Josh, before you answer, I want to ask you, Doug, could you elaborate a little bit on this gamified platform you built? I think others would be quite interested in that.
Yes, I didn't do it, but I think Trevor, he's going to be my replacement here when I retire next year, and Matt, one of their employees. So we had this competition where we split all the employees into two different groups, the Knights and the Dragons, and AI helped build this website with imagery and pictures. So every time you cross-sell something or you pick up trash in the parking lot, it's just like a game. You can go in there and push a button, and it rains, confetti, and it adds gold coins, and it updates in real time. So it ranks all the employees, and it's like a fancy website, like a video game. And it was done completely with AI. It only took half an hour or something to build. We did a little testing to get it right, but it really makes cross-selling take off in competition with our employees, and it's amazing. I mean, it would have cost probably $10,000 to develop, and we're a tiny credit union, and we still got it.
Now I'm regretting that we haven't gamified this webinar. Now that you've described that, either Scott or Josh, anything you've done in the AI space that you would share?
Yeah, well, I will say we are working on redoing our website, but internally, just making sure employees AI can really help with internal efficiency. AI for us will never replace someone answering the phone. I'm never going to have an AI agent answer the phone. We have that personal in-person connection with our members that we are never going to let AI take. But yeah, we are dipping our toes, and I am excited about the transformational opportunities that it presents, but it's going to be a different business model than some of the larger institutions use it for. It's probably very transformational for them. It is for us too, but it's just, making do more with less, and it can really help with that.
I'm going to throw two things onto that, and you got to be careful, of course, with artwork, because especially the younger generation despises AI being used for too much for artwork, which I totally understand. But for making a flyer or an ad that you need to post and putting together all the information, it takes seconds, something that used to take hours to develop. Same with regulations. If there's some new regulation, and obviously you got to check your sources and do your own logic and reasoning, but it can help you parse complex new regulations and the impact on small credit unions and how to find the cheapest, simplest, easy way to comply, which is kind of what I'm all about too.
Have any of you been concerned about having some guardrails in place in the use of AI, or do you have any policies in place?
Oh yes. We started there with policy before we did anything. So that's a huge concern for us, for sure.
And before I move on, Josh, was there anything, you're the smallest of the credit unions on this panel, anything you're doing in the AI space?
So not at my credit union at this time, but we are always looking to make sure that we have, explored all the options. And I think it's important that there's that fine line between using AI as a tool to assist your employees, but not replacing the employees. Especially as a union-focused credit union, we want to make sure that the employees don't ever feel like their jobs are being replaced by AI. But perhaps it's a tool that can take over some of the more monotonous routine tasks. So nothing in place yet, but on the Laskos side of things, we are always looking at different AI companies that can help small credit unions. one of the cool things I've seen is some of these building platforms that, you can put in a search function, very much like Google, and it pulls up anything related to your policies or procedures that the credit union has compiled. So there's a lot of useful things that, as small credit unions, when you have limited staff, it's important that I think it can give you that extra touch to really kick things into high gear and stay competitive. So.
All right, thank you. One other question I wanted to make sure I asked was, because we've talked a lot about things you're doing. Are there some things you've done that have not worked that anyone's willing to share as a lesson learned, that you tried this path, or maybe it was a revenue opportunity or member service, whatever you tried, a strategy, anything you're willing to share? You say, that just hasn't panned out for us.
I'll talk for just a minute on that. One thing that we avoid doing, because it doesn't work, is trying to spend a whole lot of money trying to advertising to the end consumer, to the public. Generally, the marketing budget of a small credit union, it may not even, a giant competitor's marketing budget for a year may be bigger than your asset size. And when it comes to marketing, if you spend 5% of what they do, you don't get 5% of the return. You get like 0.1% of the return. So we really avoid spending too much money on trying to buy ad space, because we just can't compete. Whatever we do is going to have zero return to us. As far as trying things that don't work, we always try things that don't work. And like I said earlier, that one of the advantages of being a small credit union is we can launch something new in a matter of weeks, and it's really inexpensive to do so. So we're always searching for the next niche, and we throw stuff at the wall, and 20% of the time it's great, and we end up filling a niche, and it's a profitable loan product, and we're helping our members. But the other 75% of the time it fails, and it just kind of goes away. So yeah, if you're not trying new things all the time, I think you're missing the boat.
Scott, have you had anything at Connection Credit Union that has not connected?
Well, to Doug's point on the marketing side, we were spending a bunch and none of it ever materialized. It's just noise to people, and there's no way we can compete. So we kind of took a step back and tried some different approaches. And so the financial education piece is one where we know we can compete, and getting in those communities that desperately need it, which is a lot of them. And so, yeah, I'm same with Doug. I'm always trying new stuff. Most of it doesn't work. And I'm okay with that, because you know what? Unless you try, you're never going to know whether it was a good idea or not. Most of them are not, but some of them are. So.
And to Scott's point, what we can do that works is trying to get tighter with whether it's our SAG or it's your founders or it's a small niche community. That's where we need to put our time and energy, and where we can be successful is becoming more hyper local and unique and customized for these small populations. And they're often the groups our large competitors don't even care about. So that's where our opportunity lies.
Doug, is that expensive though? I know that's a concern. A lot of larger credit unions overlook those groups. Yeah, it's just not worth. There's no ROI on that smaller group. But is it expensive to reach into these ditches? What have you experienced there?
No, it's not. Because like I said, we can do things in a few days or weeks. And even though the volume may be too small for a large institution, for a small credit union, it's plenty. It's all we need. That's plenty of volume to keep us going. So I would say no. I mean, it depends, obviously. But no, going after these small niches is cheap, and it's the only way we're going to differentiate ourselves.
I would agree with that, because we do the same thing. If it doesn't work, okay, great. You pull the plug. You didn't have to invent a whole bunch of vendor resources or staff resources. You try it, and if it doesn't work, you stop and you do something else.
I asked all of you a growth question earlier, and you acknowledge the importance of growth, even if it's not your primary focus. Where are you looking? Do you see any new opportunities for revenue that have worked for you that you could share, or that you think may offer some possibilities down the road a little further?
Well, for me, we don't focus much on non-interest income. We focus on loan interest income and doing loans. And there were years ago, 10 years ago, I was a very good subprime indirect lender, which was nuts. But I used that experience to build the Banking Beyond Bars program for the formerly incarcerated. It's the same concept. So it's really loans, finding loans, and helping people that others overlook, that their buy box is too small. Our buy box is big and malleable, and pretty flexible. And so that's an advantage we have. So it's always loans.
We're in a unique situation. I've been the CEO here for, I think, almost 19 years, I think. And we really, since I hired a commission loan sales guy, who's now going to be the new CEO to replace me, we've been growing loans hand over foot. for like 15 years, and it hasn't really been a problem. We focus on lending. You know, we have a good commission structure for him, but until just the last few years, it's been a little odd. Like we had some large out of town or out of state credit unions move in, and then COVID happened, and all these things kind of happened at the same time. So suddenly, we found ourselves in a situation where we're having to find new ways to get loans again, because suddenly this became a challenge, just competing with some large credit unions that moved into town. And so it's just pushed us to differentiate ourselves even more, focus more on our niche opportunities. At the same time, our net worth ratio, we've been very healthy and profitable for years. And our net worth ratio just has gone through the roof. So we're at 14.6%, which is like the hoarding zone. That's way more net worth than we need, way more capital. So now our problem has been more about focusing on trying to give this money back to our members, which is why we paid more and more dividends. And generally, I think we have the lowest loan fees in town, generally the lowest loan rates. We're the only one in town that doesn't charge NSF fees. So now our challenge has been trying to give this money back to our members, which is why we exist in the first place. So that's an exciting new challenge to have. But we're also having to make sure we can continue to grow members and loans. So we're getting even tighter with IBEW, our founders here in town, and we're seeing success from that. Again, those are those little areas where the volume isn't enough for a giant competitor, but it's great for our small credit union.
Ed, you have a little bit different perspective, but you led a very successful credit union. It's grown into a multi-billion-dollar operation. How did you approach lending and revenue? What was your philosophy?
Am I the only one that can't hear
No,
Ed?
I can't hear Ed either. I thought perhaps it was only me.
I apologize. I thought Walt was going to unmute me there. I got it. We were very successful in lending. We got to within 5 years of me being there, we got to over 100% loan to share ratio and stayed that way till I retired. And that because we made lending a focus. We institutionalized it. We said we're going to lead with lending. We're going to put credit back in credit union. And that did lead some interesting discussions with some of our older board members who thought we should be a savings club. And we said, we're going to find our money as cheaply as possible. If we can do it from our members, we'll do it. But we're going to lead there. But we didn't just do it on price. In fact, the last 5 years I was there, on our billboards, we never advertised a price once in 5 years. We did it by heavy duty branch lending. Most of our success was face-to-face branch lending. We got our indirect down to about 10% of our portfolio, but branch lending and some really incredible recapture programs when people would sign up for membership. So Frank, yes, thank you for asking. It was very successful. I had really good mentors in lending, and they taught me enough where I could make our credit union successful. So,
and I'm going to tag off that what we've done, and we haven't been 100% loaned out, but we've been about 90% loaned out for the last 15 years. Is we focus on business partners, so where the applications come from, whether it's some of the little dealerships in town, or whether it's HVAC contractors for AC HVAC systems. So that's how we've managed. And if anybody is watching this webinar and they look at my financials, they'll be like, wait, your ROA just dropped. Yeah, that's because we're giving a whole bunch of our money back to our members now. So I just wanted to throw that in there. Instead of it's typically been over 1%, 1.5% ROA until just this last few quarters where we're returning more money to our members. So.
Do members notice, Doug, when you give this money back? I don't mean to ask a dumb question, but
not as much as you think. We got to point it out. We'll be like, hey, did you look at your statement? They're like, holy cow, I got $20 in my savings account. We're like, yeah. So you kind of have to make sure they notice.
Right. Yeah. It's like hidden under. It's like that old phrase, "Best kept secret." It shouldn't be a secret. Ed, can I ask you just a quick follow up? What worked when it came to lending in the branch? What was successful for you? Any advice that you might share with some others that found a strategy that really worked?
We pushed authority as far out as we could towards the member, as far out as we could. And we instituted a 1-2 rule. It took one person to approve a loan, but it took two people to deny a loan. And the branch manager had complete override authority. And in all employee meetings, we would tell our branch managers and others that I can't think of a mistake that you can make that we cannot fix, barring fraud. So I wrote an article, a large article on this, Frank, and you got to have the will to lend. I mean, it's like Soren Kierkegaard, the definition of saying is a person who can will the one thing. We willed lending. We were not abusive borrowers, but we willed lending. It was who we breathed it. We talked about it. That's what we did.
That's interesting. We have about 14 minutes left, and I know that both Doug and Scott had a couple of things. They had some slides they had hoped to share. Do either of you want to point to some of the things you wanted to make sure that you shared with our audience today so that we don't run out of time? Walter, are you able to set that up for either of them, for Scott, for instance? Or yeah, if you wanted to comment on any of them.
Here's one of my slides. That's just one that kind of shows flying under the radar, where big credit unions maybe ignore certain niches that small credit unions can take advantage of. And then I listed some of the different things we've had success with. So that's all I've got on that. So there's our superpower in flying under the radar for small credit unions.
Could you elaborate a little bit? You mentioned the incarcerated program earlier. Could you just quickly say what that is?
Switch slides to his border. There it is. That's for you, Scott. It's not that slide, but it's the banking beyond bars is the one Scott wants.
Okay. Oh, there we go.
Okay. So yeah, I love to talk about this because this kind of ties in a lot of the stuff we're talking about. This is a truly underserved group. I had no experience with formerly incarcerated. I just happened to meet with a guy who happened to be formerly incarcerated. He was helping develop some youth financial education, and this program came out. And it really was based on, us trying to find a way to help in our community that others have ignored. He had gone to all the banks and credit unions in this county, and everyone said no. And I'm like, well, let me see if I can do it. And so we've been doing it for about 3 years now, and it's really focused on education. These 3 in-person group classes focused on the game of money. It's the game board, which is how the banking system really works. Your character in the game, we use a game called Money Habitudes. Look it up. It's a great tool. And then kind of how to play, which is to credit how it all works. They do those 3 classes. We open a checking account, checking and savings. I don't care what's on the credit report. And that's what tripped them up at other places. And the key thing is we assign a money mentor. It's a 12 to 14 month program. And it's after they get out, because there's a lot of resources when they're in, but when they're out, not so much. And we assign the money mentor, and then we got loan products. We're trying to help them build credits. We do a $500 credit card after a month. And then after another month, we do what we call the starter auto loan, $10,000, 10% or lower, 60-month term in GPS unit. I'm a heavy believer in GPS units for accountability. And we ended up trademarking the program. There's a website there. And if you can go to the next slide. So we created January 2023. The first people in the program came in December 2024, a year and a half. And navigating the reentry nonprofit community was a challenge because we were an outsider. And Department of Corrections, I still haven't cracked Department of Corrections. The bureaucracy there is something I have never witnessed in my entire career, and I'm not a big fan of bureaucracy. But since we started, 130 people have gone through the course, 15 different groups, ranging in size from 5 to 15 in each group. And the cool thing is all participants after the first night have been a referral from someone that's been in the program, because we have not advertised it. It's been a pilot program. And we're planning a formal rollout of it because the results have been fantastic. I don't have any losses. So far, and been doing it for a year and a half. And we're using those same pieces of the program, especially those 3 in-person classes. What we teach in there, that's the secret sauce. We're developing a program for targeted nonprofits and then our members. And then our goal is to make it available for other smaller credit unions to adopt the program. If they want to serve this community, we're going to show them how. We're going to share all the things we've learned. But the one thing that's been really cool is the loyalty that has been created with these members to our credit union is incredibly strong. And this gives me hope for the future, is programs like this that, we developed it on our own. I went looking in January 2023, who else is doing this across the country? And I found no one. Yeah, there's some credit unions doing it inside the prison system, but once they get out, they're kind of on their own. And so this kind of gives me hope because this is a future for our credit union. We found a niche that no one else was really interested in serving, and we want to attack it. And now we have data, and now we have experience, and now we have a connection with formerly incarcerated. And one thing that's really cool is the networking ability of formerly incarcerated is impressive. They help each other, they share information. And so we're just tapping into that. So I'm excited about it. And anyone that's interested, I love to share everything we're doing on it.
Way to set the example, Scott. Super awesome. Can I talk for just a minute about the endangered small credit union defense? I know we're
go ahead.
running out of time. So, and I wanted to do a shout out. I mean, it's always weird when somebody new pops up and tries to do some advocacy. And then there's lots of great advocates out there at leagues and trade associations. But last year I got frustrated because it seemed like they were never really asking for what small credit unions need. And I don't know if I have an issue with authority or what, but stupid regulations drive me crazy when they waste time and they don't serve any purpose. So I decided to actually speak up for myself and start asking for regulatory relief that mattered for small credit unions. If we're doing things that have no impact on our safety and soundness, why are we wasting all this time and money? And so that's what I got involved with. I started this organization to try to get our voices together and put together concrete lists of regulations that are stupid and waste our time and don't help our safety and soundness and don't help our members. So that was the whole purpose between the endangered small credit union defense. And some like DCUC has been great, and ACU, has been listening, and I've been feeding them information. So my intent is to be additive and to help supply the small credit union perspective. When I just shared as a lone credit union, I tried to tell them, hey, this is a dumb regulation. I kind of got the feeling like they patted me on the head and sent me on my way. So gathering small credit union voices, so we're a little bit organized and we can start to push out the information of what we need to survive and thrive. That's kind of what I'm about with this endangered small credit union defense. So I sure appreciate, and I'm slowly getting more cooperation and partnering with more leagues and associations, hopefully to share what our small credit unions need as far as our purposes too. It's looking for regulatory relief for dumb ones that just waste our time and money, and also encouraging small credit unions to give back to their members to fulfill our cooperative mission. So that's kind of what the endangered small credit union defense is.
Well, thank you, Dick. I will tell everyone, if you search ESCUD, ESCUD, on the CU Daily website, you'll get all of the coverage we've had on that program. We only have a little bit of time left. So I wanted to ask each of you, the second half of the title of this webinar was Building the Next Great Era for Credit Unions. I'd like to ask all four of you, what do you think it's going to take to build the next great era for credit unions, especially those that are more limited in assets? Begin anywhere, but would like to hear your insights.
I'll start. I'm going to say we have to do a better job of developing our next leaders. As an industry, I don't think we're doing enough to help train the next level, the next CEOs that are going to take our jobs. One of the things that's become clear in the conferences I do is some of the newer CEOs, they don't have the skill sets to really be successful. And that's where tapping in and engaging with other small credit unions, engaging with the industry, just engaging in general. Because I've been trying to connect credit unions for 10 years and it's only half. It is only half that actually engage. So the engagement is critical. And I think developing our next level of leaders is critically important, because if we don't take time to do that, then we are kind of leaving our future to chance. And I don't want to do that.
Interesting. Doug, your thoughts?
Yeah, I would suggest not comparing ourselves to big institutions, really capitalizing on our small size and what our cooperative movement is, which is giving back. And so why do we have to have, if we can, once you become a small credit and becomes healthy and profitable, we should take that money and give it back to our members, and that'll help us differentiate. And for instance, why only be like the same NSF fee as all the other big credit unions or banks? Why not, make it half or make it zero? Why charge certain fees if we don't have to? So I think, or like the banking beyond bars, find ways to really give back. And that's going to really keep the spirit alive for our cooperative movement, and make sure that small ones survive and thrive as well, to continue doing that.
And Josh, you have your new organization, and perhaps you share some of that feedback or what it is people that have belonged or reached out think will build the next great era for credit unions. What do you think?
Well, I think the future of the entire credit union movement hangs upon what happens to the small credit unions. I believe when small credit unions do well, the entire industry is going to benefit from it. A lot of times we see that the tax exemption stories that help protect the tax exemption. A lot of them come from small credit unions that are so plugged into their local communities that they have those stories that tug at the heartstrings of the ones that need to hear that message. And so I think, first of all, the future of the movement is great. I'm optimistic about it. I know we're losing 200 to 300 credit unions a year with consolidation like we've never seen before. And yet, launching this association has given me such a huge view into the future of this movement. And one thing that stands out incredibly well is when we have a new credit union sign up, we have this form basically that has a whole bunch of questions that the CEO fills out. And some common trends is a lot of times our small credit union CEOs, they're burnt out. A lot of them are tired and they're exhausted. And yet without fail, almost every single one of them is offering to help this movement and help their fellow small credit unions. So even though they don't have much left to give, they want to help. And that is what sets us apart. That is the passion of the movement. That is the heart of the movement. And when you tie that heart into the mission, I mean, the future is incredible. So we're not going away as a credit union movement. We will still be here. It may look a little different, but the future is bright for credit unions. And I don't think it's ever been as bright as it is today. Partnering with tremendous groups and people like those on the call today and collaborating across the country, there are some tremendous resources and credit unions out there, both large and small. From Nisqua's standpoint, we have some really large credit unions that have been supporting us behind the scenes. They're building resources, they're building training materials and classes to help just give away for free to our small credit unions. So it is very bright. And if I could leave you with one message, the credit union movement is not going anywhere. And if anything, it's going to continue to grow and succeed. And we're going to be starting new credit unions. We've had quite a few small credit union conversations about starting the de novo credit unions. So my vision is to hopefully slow that downward trend, but in a perfect world, we want to see that trend actually go back up as we start new credit unions. So very optimistic. I think the next great era of credit unions is here, and I'm excited to be a part of it.
Well, thank you, Josh. I just wanted to say a final comment from you, Ed. You come from a larger credit union, yet you're among the most articulate spokespersons for the concept of credit unionism and for small credit unions. What are your thoughts on if there is to be a next great era for credit unions?
As I said earlier, this great era is coming back, and our success was we decentralized so much that even we went to small towns, or we took our big towns like Houston and broke them up into villages. And so we empowered each branch as if it was almost a small credit union when it came to serving the members with authority as close to the members as possible. And that's just not going to be possible in the big credit unions or the big banks. As I told some small credit unions, you can't beat Wells Fargo, you can't beat Pentagon, but you can beat the crap out of their branch across the street from you. Believe me, you can. And if I had to sum up with something to very focus, the way that we did it is, and Frank and Walt know that I'm a theologian, so I'm going to give you a Latin saying here that I think was a focus of my success, and I had a great career. My focus success. The Jesuits have a motto, which is in Latin, age, age, quod, quod, aegis, age, quod, aegis. Do what you're doing. Don't be worried about that down the road or that next promotion or a 5-year plan. Do what you're doing right now. Focus, 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 focus. And pick your focus and then go after it.
Well, for so many people, financial cooperativism is a religion. So what a fantastic way to close. I want to thank Scott and Ed and Josh and Doug for joining the CU Daily today. I want to thank TFD Consulting for their sponsorship and being a part of this terrific webinar and sharing all of your knowledge. Thank you so much.
Thank you.
Thank you.
Thank you.